everyone, this is Rob Roy and welcome to the Elliott Wave Options S&P 500 U.S. Market Update. I haven't talked to you in about a week because not a whole heck of a lot's been going on in the market. We've been going through a consolidation, which I'll show you in the charts in just a second. But Powell also came out, Chairman Powell today, and said that the future was extraordinarily uncertain. So I think that's a green light for keeping the liquidity going. So let's take a look at the charts. Our timestamp is 2:49 a.m. Eastern Time on Tuesday night / Wednesday morning, and currently the futures are down 7 points, so pretty much signaling a flat open. Long time between now and when the market actually opens. And by the way, thanks for the comments on this hat, but this hat has to go. It's just too daggum big. So make sure you watch the next video because I got a new hat that I like a lot better. So this is the last hurrah for this one. Taking a look at the market, we were talking about this in the Trade Finder webinar tonight. And by the way, if you haven't registered for Trade Finder, please look, there should be a link up on the top of your screen. And if not, look in the comments section under the video. You can sign up for Trade Finder, free. We do it every Tuesday night. So we were talking about the fact that we had an unusual rebalancing going on. We had a normal end of quarter rebalancing. This is the last trading day for June. Typically the market moves to the upside on the last trading day of a quarter as investment managers try to ensure their bonuses. Nonetheless, we had this triangle. We have a labeled confirmed wave 4, so we're in a complex wave 4 at the moment. We had this symmetrical triangle, but now we have a different triangle. So we'll go ahead and take this off and we'll draw a new triangle, which basically shows that we currently have a descending triangle. So here's the triangle that we have now. And the question becomes, did we break out of that today, or was that just because it was the last trading day of the month and the quarter? So tomorrow we have the first trading day of July. Typically that's a bullish day. At least there'll be some buying as new money is put to work through mutual funds, etc., IRA, 401ks, all the dollar cost averaging programs. Put the money to work on the first trading day of the month. I would have liked to have seen this move come to the downside. I thought it might with the rebalancing to close this gap. Again, I do feel this gap will get closed one day, but this one's a lot closer. So break to the downside, fill this gap, but didn't happen. And it looks like the market is trying to hold here at this 300 level. Looking at the DMI, not giving us a whole lot of indication. Certainly didn't tick up with the move to the upside today, so not giving a lot of love for that upward move. As I said, there's not a whole heck of a lot to talk about from the last time that I talked to you as far as the market itself. So let's look at some other things. Take a look at the dollar. We have manufacturing data coming out as well as the jobs report. That could move the dollar, but here we have a symmetrical triangle, and these patterns work regardless of the security that you're talking about. So symmetrical triangle, move to the December contract. On the dollar, we break to the downside. What happens after you break out of a triangle is the breakout gets retraced. Normally you come back up almost all the way to the point of the breakout. We'll see if the dollar continues to rise back to the upside, but certainly bounced off the low. But the break to the downside coming out of the symmetrical triangle is classic corrective pattern Elliott Wave stuff. That's exactly what's supposed to happen. Also wanted to look at the metals because the metals have been interesting lately. So let's take a quick look at gold. So we do have a trade on both GLD and silver for our subscribers. We have them both covered, and we have them covered in both portfolios. With GLD, we had this sideways consolidation, and then we moved into a symmetrical triangle. So a bit of an odd pattern. So the way we handled this for our subscribers to cover all angles was we put a strangle on GLD. It broke to the upside. As you can see, the Elliott Wave pattern was forecasting a move higher. But remember, Elliott's rule is that corrective patterns supersede the 5-wave patterns. But in this case, the breakout was to the upside. And then taking a look at silver, with that, we had a little bit of a triangle here as well. But we had a bullish position on silver, so directionally bullish position on silver with a long call spread, but with Chairman Powell, especially today, saying the future was extraordinarily uncertain, as I said in the intro. It seems as though they have no ambition to withdraw the liquidity, even though Chairman Powell admitted that the economy was improving faster than they thought. So if the economy is indeed improving, the market doesn't seem to be too concerned about this second wave of the virus. We talked about that before, that felt it was naive to think that we were going to reopen everything and not have a spike. Well, we've had a pretty good spike, but the market doesn't seem to be concerned about it. So maybe it's short-lived and things start to calm back down. The market sure seems to think so, at least for now. But if Chairman Powell's going to keep the liquidity going and we're going to have a decent economy, then there's underlying potential for inflation, and the metals are a good place to be. Taking a look at the VIX, thought I would bring that back up. Pretty interesting here. We just had the one spike, really, coming out of this descending triangle that we had. No follow-through day or confirmation day. We just had the one spike up on the 11th of June and then back down, and now we're back down towards another area of building support right at 30, which is certainly ideal for trading options when you have elevated volatility and the pricing of options calms down, which it does when you don't have these spikes. So when I'm talking about the prices calming down, I'm talking about over the last week. You don't want to get involved in too many trades unless you're closing stuff out when you have these big spikes, because of the way they've been widening the spreads and playing around with volatilities is something that I haven't seen in a long time. I've been around plenty of times when the VIX has spiked, plenty of different scenarios that have occurred in the market, but some unusual things have occurred over the last 6 months or so with option prices, that's for sure. Keeps things interesting. So again, not a tremendous amount to talk about. I do think that we get past the first trading day of July and then we start to settle in, so the next few days are going to tell us an awful lot. So I'll be back to talk to you about it then with a new hat. Take care, everybody. Have a wonderful 4th of July. If you like these recordings, I'd like to invite you to join our new Trade Finder Live, where each and every week we do a live webinar where we talk about the market, but we also go a little more in depth into the technical analysis system that we utilize to forecast where the market's likely going to go, and also to identify trading opportunities. Get your free subscription today. Take care, everybody.